I did rebound back in November though. The dividend spiked up to about $42.58. And in December, I reached one of my highest paid months ever. Yo, what's good to all my young investors, and welcome back to the channel. For today's video, I wanted to give you guys a quick update of the stock portfolio, which is honestly something I haven't done in a cool minute. We're gonna take a quick look into a few of the stocks that I've been buying into in the past few months, which companies are doing well for me as of right now, and finally, we'll end it off with just how much money I've been getting paid these past few months just purely off of dividends. So, without wasting any time, let's get right into it. I hope you guys enjoy and find it helpful. So, the very first stock that I've been buying more of these past few months, and really just all year, is a company called JP Morgan Chase. I currently have about 10 shares of JP Morgan. And if their stock happens to go any lower, I definitely double up on these guys. There's quite a few things that I like about JP Morgan Chase. One of which is just how innovative and forward thinking they really are. Not only are these guys the largest bank in the United States asset wise, they're also starting to dip their toes in the technology field. They just recently rolled out something called Chase Quick Accept, which lets business owners send and receive payments in just a couple of minutes completely free. Something a lot of these new fintech companies like Square and PayPal just either can't do or charge extra for. This is a fintech play from JP Morgan that I really like. I'm pretty sure they know by now that technology is the future, and these guys are looking to beat out all of the competition and be on the forefront of that future. Their CEO, Jamie Dimon, is also a great leader in my personal opinion. He's been with JP Morgan for over 10 years, and he's also helped lead them out of one of the toughest periods for banks in recent history, the 2008-2009 financial crisis. So that's one of the companies that I've been buying more of. As you guys can see, the position is pretty big in my portfolio. So the second one that I've been buying more of is one called Aflac. They're an American supplemental insurance business. Now, chill out, you guys. I know it sounds a little complicated, but let me explain real quick. Aflac Insurance covers what just, regular health insurance doesn't cover. Let's say I somehow get hurt filming today's video. Aflac will actually send cash directly to me so that I can use it for my personal expenses. Things like paying the mortgage or, paying utility bills. To put it as simple as possible, they cover expenses that, regular insurance just wouldn't cover. As for Aflac's dividend, I'd go as far as to say that it's one of the safest out there. They pay out about 26% of their entire earnings to investors, which is honestly pretty low. Since this is the case with Aflac, it allows for tons of dividend growth in the future. On top of having such a stable dividend, they actually raised it by, I think, 18% a few months back. That's an insane raise, even during a regular year. But what makes it even better is that they did it during COVID. This gives a lot more confidence to the shareholders, and it really shows a lot of strength on their part. Now, a lot of the revenue actually comes from Japan, which is a bit risky, since it's never really good to depend on, just one majority source for income. But they are looking to expand into the United States quite aggressively, if I'm being honest with you guys. Aflac just recently announced that they'd be rolling out dental and vision insurance to their US markets, which is great on their part because it really lets me know that they're trying to diversify their basket. What really confuses me is, for being such a strong company, their stock price isn't really that high. They're actually down about 9 to 10% on a 1-year period, which I'm taking full advantage of. I've currently got about 14.7 shares of these guys, and I'm definitely adding more pretty quick. So those are some of the companies that I'm buying more of recently, and let's move on to some of my best performing businesses. To start things off on my best performing list, of course, Nike. I've made a 66.31% gain on these guys, which of course totals out to be a $240 return on investment so far. I have a total of 4 shares of these guys, which I bought most of when stock prices were going down. I really don't plan on selling Nike either. These guys are one of the most recognized brands in the entire world, which does hold a lot of weight in my personal opinion. I think they're up there with the Apples of the world brand-wise. And these guys are just everywhere as well. I'd say they're a part of our daily lives at this point. I actually remember back in high school, and even for my first year of college, everybody is either wearing a Nike hoodie, a Nike backpack, or some Nike sneakers. I mean, let's be realistic, you guys. I don't think Nike is going anywhere anytime soon. So that's one of my top performing businesses, Nike. Moving forward to number 2, Disney. Yo, no lie, you guys, I took a major L on Disney. Not that these guys are such a bad company, but more so because I didn't buy when they were at such low prices. I only have one share of these guys, and I've made a total gain of about 80%, which totals out to be just under $100. Hear me out, you guys. I bought Disney at about $95.56, and currently they're sitting at about $172. To make it even worse for me, and just to, rub salt on the wounds, this is the highest stock price that the company has ever had. I mean, in my defense, you guys, there was just so many deals at the time that I was buying left and right that Disney just happened to, slip right under my fingers. I'll take this on the chin though, and of course keep moving forward. So the third and final business that I'll show for today's video that's doing really well for me recently is Target. I currently own about 2 shares of Target, which I bought at around $118. Their stock price, as I make today's video, is at about $191, which brings me to a gain of 61%, or just under $150. This is a position that I'm definitely looking to build up on if stock prices start to go down again. Target, in my personal opinion, has one of, if not the most powerful physical location presence out there right now. Their online presence is really up there too. I think the reason that Target is just doing so well is because they decided to choose a different route from every other typical retail store. They made theirs an experience. Going to Target is an experience. This is definitely one for the future. I mean, if I'm being real with you guys, Target has made it sort of trendy to go shop at their stores, which is crazy powerful. So now that you guys have a quick idea of some of the companies that I'm buying more of and some of my best performing companies in my portfolio, I want to get into what you guys have been waiting for: my dividend payments. In October, I was paid a total of about $30.38, which wasn't too crazy. It was actually one of my lowest months to date. I did rebound back in November though. The dividend spiked up to about $42.58. And in December, I reached one of my highest paid months ever, with my payments adding up to about $54.90. Some of my highest paying stocks have been businesses like Store Capital, which paid me a total of about $16.81 in one sitting. We also got Realty Income, which paid me just under $6. And surprisingly, Costco. They paid me a special dividend of about $10. They had announced that every shareholder would be paid an extra $10 for simply owning the company. Just imagine what all the investors with big portfolios got. I'm talking hundreds, even thousands of dollars that these bigger portfolios got for simply just owning Costco. That's honestly just mind-boggling to me, if I'm being honest with you guys. But bringing it back to the chart, are you guys noticing a trend? The dividends are slowly getting bigger and bigger. My first month, I got 57 cents in dividends, and 1 year later, I'm getting half of $100 at 19. This is completely passive income. I haven't had to dig any holes or paint any houses for this money. And even better, you guys, these payments are gonna keep getting reinvested, and they're gonna keep growing faster and faster each and every month. My goal for this year is to reach a portfolio value of at least $40,000 before I reach my 20th birthday. And of course, start to at least average about $100 a month in dividends. Remember, you guys, this is my first real passive income investment. Real estate is coming next. I'm really excited to, take you guys on that journey with me. But of course, for now, this is all I got for today's video. I hope you guys enjoyed and, found some inspiration from my personal progress and my personal portfolio. Remember, you guys, keep grinding and keep working. I'm rooting for you. Peace.